ladies and gentlemen, thank you the Traders Club. Welcome to the market update. Hope you guys had a good week. This week trading, market continues to march higher. And today, got quite a few names here. We're gonna go through Spider, Diamond, Qs, the Russell. Let's look at semi and the financial sector and go through them today. First, let's see how far we're up now since the December lows. You can see we're up close to 19%. So we're about 19.5, about 20% run there in just 2 months. Because today is what, this February 22nd. And this one bottom December 24th, so exactly about 2 months there, and we're near 280s already. 279.14 on the Spider. That's the closing price as of today, February 22nd. This gap, this tiny gap, looks like it's already been filled with today's move. Yep. So let's get rid of that. So that's a good sign. So only gap is left, the small gap is left, tiny gap from here, very, very small. That's not going to be a whole lot of anything, but all the bearish gaps has been filled on the Spider. We do have a lot of gaps to look at on the Qs. We'll talk about that here, but in looking at things in a year to date, you know, in this group, actually semiconductor is leading the all the indices here. We got the Russell 2000 up 17% year to date. I think Russell is up 25% since the December lows. But we got S&P 11 year to date, Diamond 10, close to 11, Qs 11.2. And so you can see also the banks is also up 11.25%. Since the year to date there. So market saw some massive reversal, and this is something we've been talking about, which is this is something that most people was not able to anticipate, and a lot of people was not able to participate and profit from this move. And that's how a lot of times market moves, you know what I mean? There's still so many bears out there. You know, one thing that I start to realize is bears always assume theories because of this, because of that, market should be something. That's kind of the wrong way to approach things. Best way to approach the market is understanding the rules of the game. Think about if you're, let's say if you're playing a board game, right? And you keep losing. Right, you're playing against your friends are keep beating you. And if you start telling your friends, well, the game is rigged, man, you manipulated the game. And then, you know, well, I'm still a winner because the game should be this way. Game should be played this way. That's what a lot of times the bears are saying. They say, well, the game is rigged. The S&P should be at 600, which is 60 on the Spider. Well, the market shouldn't be up this much. You see, instead of playing by the rules and trying to win the game, what they do is they make excuses trying to justify for their losses, right? But the market is never going to reward you for what you think it should happen, why you think, again, assuming theories. You have certain theories. It could be a fundamental theory, it could be a technical theory, whatever theory you might have. You're so fixated on the this idea that market should be, or market shouldn't be here. You know how many times you hear that from bears, right? Market shouldn't be up here. Well, market is up here. And market is probably going to continue higher, right? So that's kind of how it is. You're playing a board game with your friend, and all you're saying is, well, the game shouldn't be this way. Well, that's the game. Well, then don't play the game because you're going to keep losing. That's why your friends are keep beating you because they learn how to play the game by the rules and learn how to beat the game or beat you using or maximizing and playing within the rules, versus you just whining and moaning and say, well, the game shouldn't be this way. The rules should be changed. Well, then it's not a game. The game is the game because somebody else put the rules together. You gotta play by those rules, you see. But the bears always say, well, we shouldn't be up this high. We should be at 600 on the S&P. We should be way much lower because of these reasons, right? Well, you could be whining, you can be arguing, you can assume theories and declare why we shouldn't be up here, but all it's doing is you're just not able to profit from the market. Instead of looking at what's happening in right in front of you, you keep arguing why it shouldn't be, right? And that's the interesting part. That's what you call, maybe in a harsh word, a bigot. Somebody who's unable to learn, unable to adapt. Instead, they just assume theories and justify why they're still right, while the market is proving them every day that they are wrong, and they've been wrong for how many years now, right? I mean, I've been hearing talking about major crashes since 2012, 13, 14. And they're about to be wrong again. And something I always say, and I'm just sick and tired of saying it sometimes, is that every pullback, it doesn't stop for the bears to come out saying this is going to be the start of a recession or a crash. You know what I mean? And if you've been following me long enough, you've seen my long-term analysis, the secular and the macro and the primary term trend analysis and forecast. Right, they are forecasts. I forecast it. Right? Some people like to say, it's not a forecast. I'm just saying. No, it's a forecast. I'm forecasting. If as a trader, as an investor, you got to forecast. You place a trade, you're expecting that thing to go higher. You're forecasting, right? It's crazy how some people just love to be politically correct. They want to be friends with a bear and a bone. They want to accumulate most followers ever, and they don't want to offend anybody, right? But when it comes to the market, you can't treat the market that way because, well, market, it is a brutal place. If you're not strong enough, market will surely chew you up into million pieces and just spit you out like you're nothing but a dirt. That's the animal you're dealing with. There's no room for softness. There's no room for dostling around with your stupid words so that you could maybe not offend anyone. At the end of the day, none of that matters. We're here to look at the market and trying to beat the market by profiting it. And something I talked to you guys before, top 10% makes the money consistently, 90% funds the top 10%. So you have to think different. Like Socrates says, if you want to be wrong, then follow the masses. Follow the masses, right? Why do you think these people who's been wrong for years and years and years, they get the most high followings, high views? Because those masses keep watching these videos that speaks that who are advocating a bear's scenario. So when you really talk to the bears, they'll just kind of repeat what these quote-unquote experts are saying with their bearish theories. The national debt, the debasement of currency, you know what I mean? The interest rates and the printing money. That's always been the same talk since I don't know how many years ago. Right? And then every day they say, well, the market shouldn't be up here. Right? So you're saying, well, this game shouldn't be played this way. Well, then don't play this game. Make your own damn game, right? Make your own damn game and then play it. Anyway, let's go through these here. So, first of all, let's kind of talk about that. What was that? Crap, what was the moving average? No, 45. High, Yeah, that's, you guys remember yeah, there you go. So you guys remember my post? I think I wrote, I wrote it like a week ago, a couple weeks ago, the S&P running into resistance. That post, so that's what I'm talking about in that post. So basically you can see, so there's just, just looking at this couple scenarios here, you can see in 2011, we did see that level that was support and then became resistance for what? This is a weekly chart, guys. So for what? 1, 2, 3, 4, 5 weeks before making up. And then what did we see? We saw retest. So this is important moving average to keep in mind, because sooner or later we're gonna come back down. But man, we did see a huge move, pull back. That's what you call higher low. Please do not call for a crash every single pullback. An uptrend is developed and established with higher lows and higher highs. Embrace those pullbacks because bigger move is coming. In 2016 though, this thing actually continued to grind higher. You can see here, and we came all the way to this level, the prior peak. So are we gonna look something similar to maybe 2016, where this thing comes up all the way to peak, which means we thrusted higher and then we saw in about 3 more weeks of bullish run. So we're right now thrusting up here. Could there be maybe a couple more weeks of bullish run? Are we gonna maybe retest 290? That's a possibility. Again, something I talked about in that blog post, and also last couple weeks. I mean, the odds are catching up against the bulls, but the bulls have gained so much momentum at this point with decreasing odds. They can keep moving higher like this. You know why? Because market just love to surprise everybody, right? And this is just massive short squeeze we're seeing. This could very well go to 290 again. Best case scenario I talked about, maybe the best case scenario 300, and then possibly coming back, retesting the 200 SMA. As of today, the moving average, I tweeted out today that we have protected that level. This green box, those are island reversal. Island reversal meaning it initially gapped down a couple days earlier, and then it like gapped right back up a couple days later. So it kind of became an island, right? So that's what that green box is. But this gap is still open. So we got a lot of gaps open. You got this a big gap, and then we got this gap, which is island reversal. And we've been all around it. We've been talking a lot about that in late January. You guys remember I tweeted a lot about that, and also we talked about it in the videos. And then we got that's another island. We got another gap. We got 1, 2, 3, 4 gaps to the upside. I mean, bulls are stacked. And all those gaps are gonna provide a support. Should we see some kind of a correction or decline, but I think there's a good chance this thing could continue to grind higher. 290, 280 is gonna be most anticipated resistance of the year, because this is a level bears are hoping that's the resistance. The thing what you don't understand about trend is that we're near here. We no longer see bears. You have to understand. We no longer have lower highs anymore. You're no longer in bearish territory anymore, bears. You're now getting into bullish territory. You better be careful here, because bearish downtrend is cultivated by what? Lower highs and lower lows. That's what downtrend really is. Once we start to get up here, which is we're already up there at 280, we now have what we call equal highs. That is a first step. You see when the bulls are willing to turn things around back to bullish uptrend. Great example of that would be 2010, right? Can you imagine how many people were like, oh my God, that's 2010. So, I mean, people are still remembering what happened in 2008. 2008, we threw that head and shoulder, that thing tanked. We got in a recession. So when the investors and traders saw this, they're freaking out. But look at the first level first thing we saw was that equal highs. We no longer in a downtrend. We no longer in a downtrend. We got equal highs, right? We did see that pullback, and we saw perfect inverted head and shoulders, and then rest is history. Today, though, I think a lot of people are anticipating that inverted head and shoulders, and I think that's why we may not get it. We may not get it. If we do get it, you be sure that I'll be buying that dip on that left shoulder, on that right shoulder, on the inverted head and shoulders. But because I think everybody's anticipating it, maybe even everybody's preparing for it possibly, we may not get it. Potential scenario might be then we might go up and then down and then up. Something like that, right? So we're above all the moving averages now. We're up to above 200 SMA. We're above 100 SMA. You can see the 10 EMA there, 20 EMA there, 50 EMA there, 50 EMA, 100 SMA crossing today. This is the first time. You can see the 100 and the 50 crossing. The first time they crossed down here, you can see right here. That was when the 50 and the 100 was crossing to the downside, and now you can see they're crossing to the upside. So momentum's definitely shifting there. Let's go to Diamond. Diamond has gained so much momentum here. Diamond is now merely 3% away from all-time high, 3%. And we've cleared this downtrend resistance, and what a just great move here. And you can see we're just near this high, right? Where we no longer have lower highs. We're no longer in a bearish territory. Bears have lost a lot of its real estate, and bulls have gained so much momentum. And any kind of pullback at this point will be an opportunity to buy when it comes to probability, right? So that also looks great there. Diamond making, I'm just kind of wondering how much it has moved since the lows. 20%, 19.9% move. That's a great move there. And yeah, even weekly is looking great. Diamond looking so bullish. I mean, all these indices are looking very much bullish here. So Qs, right? Same thing. This is a neckline, right? People got trapped. Right, especially the bears. Not only the bears, bulls also got trapped. Why? They close out their positions here, man. They got scared. They close out their positions. V-shaped higher. They don't know when to go back long because they thought there's going to be a double bottom. Double bottom never came. And then now they're trying to maybe chase it up here. But the thing about it is they lost their money when they close out their position with loss. If this thing start pulling back, they're going to be losing again. So now they don't know what to do. We clear that. And there's not a downside gap though on the Qs. So those things gonna kind of make things a little bit hectic in the short term. But I think bulls getting ready to fill all of those gaps there. Let's go to Russell 2000. Russell 2000 is finally made equal highs. It is now up 26% from the December lows. 26%. Now we're just here. We are no longer in a bearish territory, ladies and gentlemen. You can see this is what you call equal highs. We no longer have lower highs and lower lows. If this thing pulls back anywhere in this vicinity, I mean, that's the opportunity to buy, but that's too easy. Everybody's anticipating this because we had a V-shaped reversal. So we probably not going to get a perfect V-shape invert head and shoulders, not like back in 2010. What I think we could continue grind higher, maybe some shenanigan, and then, you know, maybe something like that. You know, that would be more likely to go up a little bit and then pull back, and then maybe, you know, hit the 50 and then get up. But even then, that would be a good level to buy that dip. I mean, exactly at this point, it's very, very difficult to forecast the short-term pullbacks. We'll just kind of have to wait it out and see how the, you know, where the market is going to respect and how it's going to have his pullback. But man, it looks like we could very well continue, because when you look at a weekly chart, we're not oversold yet. Look at here. See, that's oversold. Last time when this thing was oversold in 2016, we went all the way back up to here. So you can see we got some room to move. We still got a little bit more room to move. And this is a weekly chart, so I mean, this oscillator is going to move pretty slowly. So I mean, how much can it move in the next 1 or 2 weeks for that oscillator to become overbought? Because we're not overbought yet. This is overbought territory. We just got a little bit of room here. And last time, again, when we went oversold, that thing pretty much went all the way to overbought territory, right? Looking great there. Well, not, or we got 2 more here. Semiconductor is now hitting that downtrend resistance. It's a prior resistance here. We broke below this support. How many people thought that that's a massive topping pattern before this thing complete rollover? I remember somebody was saying that the semiconductor was going, like on the SMH, it's going like, you know, 40s. We're at hundreds. I mean, why is it people always why assume that just because we breaking certain level that it's going to be the demise of that sector? Why? You know what I mean? Like, because they don't understand the primary term trend perspective. They have no capacity to even understand it. So then they just like, oh my God, yeah, that's the low, man. That thing is going to go crash. And then we just drives above it and we're back here. Semiconductor, though, obviously we are in a downtrend still in this intermediate term. We are still in the lower highs. To get back up to equal high, it needs to come to about 110 to kind of nullify that downtrend resistance. So we'll continue to watch and see how it plays out. But man, semiconductors also from the December lows is up almost 30%. 30%. That's pretty crazy. I remember I did buy semiconductor triple shares actually at the lows, and that's about 100% up already in just a month and a half. But anyway, banks, XLF. So we had this downtrend, falling channel actually, and we just plunged, and then we're just right back up. We actually cleared this resistance. Banks still looks vulnerable for the fact that we are still in a lower highs. You can see we got that kind of a intermediate lower highs, and then we got this kind of another intermediate to minor lower highs. It needs to not only get up here, it needs to get all the way up 2903 as far as chart pattern is concerned to make this, to nullify this lower high trend that we're going on. I mean, we're talking about Spider, Diamond, Qs, and IWM. They all got up to that high, right? And we talked about that, right? I mean, like, you know, this one, we got up to here, right? So we're here. So now we're making equal highs. However, on the XLF is lagging quite a bit, and so still look vulnerable on the XLF, but we're finally starting to see some move here, and it needs to first reclaim this and then go reclaim that to nullify and turn this back into a bullish territory. Still, for the banks, we're still in the bearish territory, so it's kind of bit, you know, like lagging here. We didn't see, I mean, we see a steeper decline, but we didn't see a much faster recovery. We're just kind of been a little bit lagging here on the banks. So banks a little bit vulnerable look. So, but usually banks and also the energy, they tend to kind of come later. So once we see Spider and these other indices starts to, you know, grind higher, these index kind of, you know, out of nowhere see a big bullish candles and possibly see a big move in one day. Because I mean, that's kind of what these sectors can do. They could grind and could have like 3% day. You know what I mean? Like maybe these days you see on 3 days, it just moved. In 3 days, it just moved from here to here, like, you know, 5%, something like that. So we got next up, I think there's this gap. I think it's gonna get up here to fill this gap, and then it's gonna slow things down and then get up there. So that's kind of what I'm thinking there. So, well, that's everything, guys, for me. You guys have a wonderful weekend, and good luck trading next week.